This is your LMAX exchange technical update for Tuesday, August 8th, 2017. Euro dollar. So the euro has finally entered a period of correction since stalling out by the 2017 high the other week. That's a plus 2.5-year high at 119.11. And there is room now for potential for extension of these declines back down towards even the 113 to 114 area, potentially into the 112 area, before the market considers the possibility of a bullish resumption and a higher low. At this point, the breakout that we did see above the 117 area several days back does suggest that this market is seeing a more significant longer-term bullish structural shift. But again, on a short-term basis, this latest stalling out above 119 does suggest that we could see a period of correction over the coming sessions before the market looks to resume its uptrend in 2017. Sterling dollar. So cable has recently stalled out by a 2017 high above 132, and the market now is possibly looking to extend these declines that it's seen since last week back down towards some support, which comes in around the 128 area. Ultimately, the structure here continues to favor the top side now following a breakout in April above a previous range resistance at 127.75. And so if we do see setbacks, they should be supported into the 128 area and certainly around the 127s. Only back below 125.90 would compromise the constructive outlook for sterling dollar. Dollar yen. So dollar yen has seen a bit of a bounce after the market traded down to just under 110, but overall here you can see that the market has been in a range trade, and since stalling out above 114 there is risk for additional declines down towards the 2017 low just shy of 108. At this point it would take a break all the way back above 114.50 to compromise this outlook. Euro Swiss. So Euro Swiss has been comfortable consolidating just off its recent 2017 high, which is also the highest levels this market has been at since 2015, January of 2015. But with daily studies overbought, there is risk that we see a bit more of a correction to the downside, potentially back towards some previous resistance now turn support in the 112 area before it considers running higher. Again, the break above 112 that we saw does open the door for a potential retest up towards 120, those levels that were last seen in January of 2015. Aussie dollar. So Aussie dollar looks to be putting in some form of a top, at least on a short-term basis, after the market stalled above 80, and there is risk now for deeper setbacks down towards the 76 to 77 area if the market can establish below some support, which comes in around recent range lows around the 78-75 level. If that happens again, there is risk for deeper setbacks, potentially down towards the 77 area, 76 to 77 area. At this point, it would take a break back above 80 to potentially take the immediate pressure off the downside. Dollar CAD. So dollar CAD has been running higher since correcting out from those recent 2017 and plus 2-year lows at 24.14. There is room for this correction to extend further up towards the 130 area before the market considers a resumption of this downtrend, this intense downtrend that we've been seeing since May of 2017. At the same time, if the market looks to establish a close back above 130, we could be looking to see a resumption of a broader, longer-term uptrend in this market. So a bit of a critical inflection point for dollar CAD right now, but at a minimum this bounce that we're seeing does still have room to correct higher even if we are still within a downtrend. Kiwi dollar. So the New Zealand dollar has recently accelerated to the downside after putting in a plus 2-year high above 75. The close that we saw below 74 does set the stage for deeper setbacks in the sessions ahead down towards the 72 area. And at this point, the market could be seeing a resumption of declines that accelerates even beyond there. But again, on a short-term basis, there is risk for deeper setbacks initially towards 72 before we consider the possibility of resumption of gains following that significant breakout above 75. SPX 500. The S&P 500 is consolidating just off a record high that was seen the other week, and there is risk now for the market to extend beyond this measured move extension that we've cited at 2480 and towards 2500 further up. It's going to take a break back below 2458 at a minimum to take the immediate pressure off the top side. gold. So gold has seen a market has been very well supported over the past several months, and the market has been supported now most recently ahead of 1200. And so if we do see setbacks over the coming sessions, look for a higher low, ideally in the 1230 area or ahead of 1230, in favor of a continuation of gains back through the 2017 high at 1296 and towards the 2016 peak at 1375 further up. Only close below 1200 would compromise this constructive outlook for gold.